I'm really excited to be here. We've got a really great panel here talking about a very important topic. My name is Trey Sellers. I am VP of Enterprise Sales at Unchained. And I've had a front row seat to Bitcoin collateralized credit and the credit markets with Bitcoin backing that in 3 years at Unchained, which has been kind of a pioneering product for us. And we've been in this market through multiple cycles. And it's been very interesting to navigate those cycles with Bitcoin-backed loans. But these three gentlemen here have a lot of experience that they'd like to share with us around what the market looks like, why Bitcoin is good as collateral, and how this market for lending dollars against Bitcoin and other potential credit opportunities that might exist and evolve are going to take shape over the next few years. So with that, why don't we go through and just start with a brief introduction. Tell us a little bit about your business and how you participate in this Bitcoin collateralized credit market.
Thank you. My name is Nitin Agarwal. I'm one of the co-founders and chief revenue officers of FV Bank. We are a bank based out of Puerto Rico. Yes, we are a real bank, US dollar bank. We provide US dollar bank accounts to businesses globally. We focus a lot on the fintech and the blockchain industry. We also custody Bitcoin, and we are principal members of Visa, so we issue cards as well. And we serve globally, so we serve the US market, we serve the rest of the world as well. And we see a significant demand in terms of US dollar as well as Bitcoin collateralized US dollars. So we'll talk about it more, but that's how we are playing a role. We custody it, we bring lenders and borrowers together as well to lend against Bitcoin. Over to you.
Thanks, Nitin. Thanks, Trey. Great to be here. My name is Mauricio Bartolomeo. I am the co-founder and chief sales officer at Ledn. As the name suggests, Ledn specializes in Bitcoin-backed lending. So we allow people to post their Bitcoin as collateral and borrow US dollars when they need liquidity and they don't want to sell it. We have, to give you a sense about our size, we've been doing this since 2018. We did Canada's first Bitcoin-backed loan. To date, we've originated over $100 million worth of retail Bitcoin-backed loans. We also lend Bitcoin institutionally. We've done over $5 billion worth of institutional loans since inception. We do service the US, but we do have a bit of an international focus. I am from Venezuela myself, so we know how much people need this product in Latin America. We service clients globally, and we believe Bitcoin is the best collateral asset in the world.
Awesome. My name is Matt Dines. I am the co-founder of an SEC-registered investment advisor named Build Asset Management. We focus on investment grade, dollar credit, intermediate duration specifically, so the front and belly end of the issuance curve, if you will. We came in 2022, I think it was, looking to deploy into the Bitcoin-backed credit space, and what we found in review, due diligence, we found a great partner at Unchained, really satisfied through the due diligence process with their risk management, their approach to collaborative custody, segmentation of Bitcoin on each loan product, really ties up well with the risk profile we're looking to achieve in the dollar credit markets, which is the big shift that's been underway since I'd say 2019, 2020, where dollar IOUs are really struggling to hold their purchasing power. I think this and what firms like Unchained are doing are part of that story. And as an investment fund manager in credit, leading the way, top performer amongst a management group, household names everybody's probably familiar with on Wall Street. We think Bitcoin-backed lending is a key part of preserving some of that real wealth that's tied up in dollar IOUs.
Yeah, I appreciate that. And let's keep it with you, Matt. Bitcoin-backed lending implies that you are lending dollars, fiat currency, with a backing from Bitcoin. You're putting Bitcoin up as collateral for that loan. What makes Bitcoin good collateral in your view?
Yeah, I think that's the key to it. First off, you start with the borrower, and Unchained does commercial lending. So you've found a group of Bitcoin adopting entrepreneurs who want to hold Bitcoin as the reserve asset on their balance sheet. So these are corporates who would typically be your commercial borrowers at a small and regional U.S. bank. We operate specifically within the onshore dollar system. So you start with the borrower, the Bitcoin adopter is first. But first off, they see it that Bitcoin is where they want to hold their reserve. Now, when they post that asset as collateral, you get some pretty awesome benefits relative to other assets that a business owner or entrepreneur, high net worth individual could post to secure a dollar loan. And Bitcoin stands out for its liquidity. It's non-depreciable. It's weightless. It's very low cost of carry, and it's got a bid 24/7. So you know exactly. You don't know the price, but you know you need a bid, or you have a bid if you need to do a workout or potentially liquidate a part of your loan to get principal and accrued interest protected. So, in terms of other assets, real estate, multifamily lending, other just property, plant, and equipment that aren't fungible, don't have a bid, can't get a call on a Saturday night if you need to. Bitcoin stands out as unique for, I think, the recovery is what you're looking for when you're doing secured lending. So it truly is one of a kind. There's only one other asset that competes with it, in my opinion, on the entire feature set, and that would be like U.S. Treasury government debt, which is typically also not going to be held by a business lender that we look to lend into. So Bitcoin serves that unique niche. It's a special asset.
Yeah, and I would add verifiability, right? Bitcoin is uniquely verifiable. Anything to add, Mauricio or Nitin?
Yeah, a couple of things. So for the reasons Matt mentioned, and you mentioned, I think Bitcoin is better collateral than, say, U.S. real estate or many other assets. So I do believe in a long enough time frame, you will be able to borrow against your Bitcoin cheaper, faster, and better than you are able to borrow against U.S. real estate today. Just because of market forces. I do believe in that future. And the other thing I think Bitcoin does is we lend to clients all over the world. And a Bitcoin from Colombia and Mexico is just as good as a Bitcoin from Canada or Texas or Florida. And for the first time in many, many years, I can say, and Ledn can say, that we lend to people across the world at the same rates, with the same quality of service, and we offer the same value prop to you, whether you are in Colombia or in Canada or in Texas or in Florida. I don't believe there's any other financial product or service that can say the same thing. So when people talk about Bitcoin financial inclusion in these abstract terms, I always like to bring this back to it is happening. It is evening the playing field. It is evening access to credit across the world, and that's what it should do, and we should celebrate that. So that's what I will add.
Yeah, and go ahead.
I'll just say in one word, I think it's the liquidity. So it's very liquid. So if you keep your gold, or gold is also okay, but gold or even real estate is difficult, right? This one is very liquid. And I think what we have seen are there are corporates who are borrowing, there are individuals who are borrowing. And in corporates as well, we see a lot of prime brokers who would want to hold Bitcoin and then borrow against that because they have a counterparty risk if they want to trade in an exchange. So they want to borrow against a Bitcoin and then keep it in a tri-party custody and then trade in an exchange and avoid the counterparty risks. Then we also see the individuals, both in terms of for management of taxes, because as soon as you sell your Bitcoin, then it is a taxable event. And then secondly, it is also important that people want to hold to their Bitcoins, like Michael Saylor is talking about $49 million worth of Bitcoin in few years. You would want to hold on to that, but you still need the money to either buy real estate or to just live your life. So we also see that people want they want dollars or credit lines against Bitcoin as well, and that's what I think the world is moving towards. I also think that someday even governments, what we are talking about, there will be Bitcoin reserves in governments. Maybe government will also want to borrow against their Bitcoin. So
interesting. I see credit building on top of Bitcoin as this kind of parallel track while we live in a world where both Bitcoin and fiat currency still exist. And maybe down the line, we live on a Bitcoin standard across the world, and the need for that credit is not as great. But at least for the time being, we're probably going to continue to see this market develop. Mauricio, the landscape of people providing Bitcoin-backed credit has changed pretty drastically over the last few years. You and Ledn have been around for quite a few number of years. Unchained has as well. What went wrong in 2022 with some of the names that we all know by heart by now, BlockFi and Genesis and Voyager and Celsius, these other entities, these other businesses that were providing Bitcoin-backed credit?
It's a great question, Trey. And by the way, huge kudos to Unchained as well. I have mad respect for what you guys have done. I think it's very important to have best-in-class operators that can show that this activity can be done responsibly. And to your point about 2022, I think what we had in 2022 was a group of poor operators and very poor risk management disguised as safe products. These companies had, tokens that they all issued, and they played all sorts of games with these tokens. They accepted all sorts of esoteric assets as custody for these digital asset-backed loans, assets that did not have the depth and liquidity that Bitcoin had. It was very hard to get out of those assets, offload that risk. And they also, importantly, had other offerings that were all bucketed in this omnibus company. And where a lot of these issues happened were in their yield products, where they were basically staking assets in very risky protocols like Terra Luna, taking big losses there. They were underwriting loans to firms like Three Arrows that never showed a financial statement as part of the diligence process. They were hugely concentrated to these firms just to be able to pay a yield that they were offering to lure clients into their platforms. And I think a big issue also was that back in this run-up, VCs on the market was rewarding assets on platform. And the way you get assets on platform as a lending firm is by supporting the newest and coolest token, even if that token has no liquidity or use case. You would get all that community coming in and roaring and cheering you on, and then you would get money from the VCs for doing so, and you were basically being paid to take insane amounts of risk. And you were buying stadiums to cover this riskiness and make it look legitimized. And it ended up in a very nasty car crash that many of us could have predicted and did predict. But when we told people, stick to Bitcoin, don't do a token, come to Ledn, they would call us the boring Canadians, the boring operators. And, sometimes this should be boring. Some of the people watching here came to Ledn from Celsius, from their unfortunate experience they had. We ended up refinancing a huge chunk of people that had to go through a nasty bankruptcy and came to Ledn after basically, they were able to get their assets out of Celsius many years later. So I think a lot of things went wrong, but if I could say, there were so many red flags. The tokens, the insane listing of assets as they came out. There's just a lot to go down the list, but yeah, I'll cap it at that.
So I'll chime in here. So I am kind of on the front lines meeting with institutional investment committees to pull in the credit allocations into, Bitcoin collateralized lending. And I think that the last wave, let's say like 45 years, post 17, 18, bull market to, 2022 bull market, that wave of like dominant crypto lenders and market share, I don't know how many, there were no big survivors. I think Unchained, Ledn survived. And those are what I would call the performant credits, and those earn the reputation to actually receive allocations in a credit sleeve or a dollar, fixed income sleeve for an institutional allocator. But if you go in and you're starting with those, you mentioned the names, we don't need to list them here, but they wind up on the graveyard. They were supposed to be performant. They turn into distressed assets. Now you got like a pile of essentially just issuers' names that you're trying to pull into what you call the distressed debt funds, and they've made a lot of money in terms of like the Mt. Gox claims, the FTX claims. Like that's actually an institutional allocation in distress class. But if you want to tap the bigger pool of dollar capital, you got to have performant credit, and so there's not that many who have survived. And I think just laying the groundwork to go slow. Get your operations right, get the risk management right, get your loan documents right, everything. That's kind of laid the scenes for institutional adoption, I think. And what's turned into distress, that's not going to pull capital into the space. That's not a positive message. That's just a cleanup after the fact. So I think this cycle, for the first time, we actually have that kind of the backbone, the infrastructure for actual performant credit. We have a fund that's segmented the Bitcoin-backed loans that meet our due diligence. And right now, I'll just be totally forthright in saying this. I think the only thing that we're comfortable funding from a credit landscape is how Unchained does it. But we have a segmented fund that has a track record of only Bitcoin-backed loans. It's performant. 12 months of track record now, going on 13. But it's just that continuous proof of work to show up with an investment committee and show that you're not going to turn into the distressed debt, because that scares institutional capital with their credit allocation away, which is a huge chunk of like an overall pension's total book of business. So I think getting them to understand what went wrong the prior cycle, and then us on stage as hopefully good actors getting the risk management right is part of that story for growth and Bitcoin adoption on this side of capital markets.
Yeah, I think a lot of people have learned the lesson around going out, quote unquote, the risk curve by bringing in all these other tokens and the DeFi protocols and all this stuff that Mauricio, you were talking about. So if you stay Bitcoin only, or as close to Bitcoin as you possibly can in terms of this collateralized lending market, you are drastically reducing the risk to both the borrower and the lender for that capital. Nitin, how do you all think about risk around this market? What are the other factors that people should be considering?
I think the word risk management has started being used in the DeFi world recently. 2 years back, when you're talking about 22, 21, that time Terra Luna was giving 18%. And how it was giving, nobody was questioning. So I think
nobody asked, where does the yield
exactly
come
from? Right? And the second word was rehypothecation, right? If you are holding your coins and then again giving it to Terra Luna to earn the yield, so I think it was greed also. So where we are right now, it is far more mature times and far more mature a cycle. We from a regulated institution means we are like, I think 13 months in a year, we are under audit, something or the other. So risk management, compliance, audits, etc. This is everyday talk. And that's how we look at it. Everything has to be looked at from those aspects which the world has shown us in the past, and we can learn from those mistakes. So that's how we look at it.
Very good. How do we expect this market to grow and evolve over the next, call it 5 to 10 years? I think in the U.S., banks have not really come into play yet, but they are starting to outside of the U.S. to bring capital into this market. Do we expect that in the U.S. that ecosystem is going to change, that maybe yields will come down as more capital comes in and people start to realize the value of Bitcoin? How do we think this market's going to take shape in the short to medium term and then into the long term?
I'm happy to take a stab at that. We are in the front lines of this, and one of the biggest things for us is our loan book has grown tremendously. We've done over $200 million worth of Bitcoin-backed loans year to date, and so we need to find the dollars to meet that demand. And we're constantly working with partners that can bring that liquidity. And 2 years ago, I can tell you that we would knock on banks' doors all the time, and nobody wanted to have a phone call with us even or talk to us about this lending. Today, our two largest funding partners are banks, and we will be making an announcement very shortly with a regulated bank, which I think will be the first announcement for this industry with a regulated bank. And that, I think, is sort of the writing on the wall of what's coming. Right now, you're seeing banks outside the U.S. be the ones pioneering this. We have banks internally in the U.S. Silvergate and Signature were doing Bitcoin-backed loans before all these European banks were, but unfortunately, we all know what happened to them earlier this year. But they get it. They are very interested, and they are getting closer and closer to this space. So I think it is an inevitability. It's not even an if, it's a when, that banks will come in. They will help all of us bid down the cost of capital for these loans, which will make these loans become all much more available and much more attractive and cost-effective for the end borrower. And I would see this as a massively growing pie, especially as the meme of Bitcoin as a reserve asset for a person, for a company, and for a country keeps getting reinforced.
Yeah, Matt, when you're talking to institutional investors who are bringing capital into the space, are you talking to banks? Is it just private investors? Is it hedge funds? Like, what's the profile of people who are bringing capital into Build?
Yeah, so the U.S. banking system, I think Mauricio kind of hinted at this. It's kind of cordoned off right now until we get clarity coming out of the election. So SAB 121, the kind of dynamics of that, getting to Biden's desk, getting vetoed back in June, just kind of put things on pause, and I think we're waiting to see which side wins this election and which direction that goes. So I think it's dependent for the U.S. on 2024, but on a longer time horizon, 2026, 2028, the trends are there. This is, I think in terms of Clayton Christensen's disruption from below, the Bitcoin-backed secured lending, like Bitcoin is a powerful wave, and it's not going anywhere. It's going to continue to compound, continue to add new entrepreneurs, new businesses, value creation on top of that. And eventually the U.S. banking system is going to be in. It's coming. It's just a matter of on what terms and when. But I hold the view this Bitcoin is going to be a positive for the U.S. financial system, for the U.S. banks. They're a little slow, which is understandable given the kind of disruptive technology that Bitcoin is. But I think like we saw in the 2024 cycle was adoption from the broker-dealers and asset managers with the ETF launches. That was their foray and planting their flag. I think, over this coming next 4-year cycle, the development and the trends are underway. Like it's going to be the credit side of capital markets and U.S. banking system, I think, catches up in the next 4 years.
Yeah, that's a good point. And I have, years of experience in banking, and collateral in a broad sense is kind of the lifeblood of the current financial monetary system. Bitcoin being brought into those veins, if you will, is that something that we think is coming? Nitin, any thoughts there on how Bitcoin could be brought into this general collateral landscape that is kind of dominated by U.S. Treasuries at the moment?
I think it is coming, but I also think that there will be rating agencies who will start rating these collaterals. Right now, we are still we don't know if it is tier 1 capital or not. Okay, where do we put ourselves in terms of Basel norms? Where do we put ourselves as regulatory capital, right? So there are many more things to be figured out, which I think a lot of people are doing. I also think, you talked about 3 to 5 years. I think that significant amount of work will be done by AI as well. I think we cannot discount that. We will see that models will be built to do these risk management and then risk ratings on these underlying assets, which will be done by AI models rather than just depending on humans, which are prone to. We've seen what happened in 2008, etc. So we'll see a significant amount of that growth, which will come in 3 to 5 years, and it'll be the banks who are more tech savvy and are building for the future. They will probably take the first bite, and then rest will follow.
Very good. We've got a little bit under a minute left. Keep it with you, Nitin, and then just go down the line. Like, any last thoughts? What message might you have for capital allocators who are looking at Bitcoin, who are thinking about coming into a collateralized lending type of arrangement or bringing this into their strategy?
I think the demand is there from both sides. And I think we just need to figure out the right balance of risk, technology, etc., to pull this together. Like I said, there will be a lot of technology which will be built around that. And there are some banks who, like even we, are spending significant amount of effort and time and to build technology around compliances into AI, how we will be able to manage this. And we also said that I think even government will come and start appreciating that if you're holding Bitcoin as a collateral, the asset quality or the loan quality is much higher than holding something else.
Very good. Mauricio, any last thoughts there? What do you have to say to capital allocators?
I would say these high yields won't be around for much longer. I would say the banks are coming. People like Unchained and us have been operating these things and done hundreds, billions of dollars in retail loans with a single penny lost and paying double-digit yields. The banks are coming, and if you don't act before they do, the banks are just going to eat this cake as they have any other cakes. So come talk to us. We're open for business.
Yeah, I'll give a final sign-off here. I'd say if you're an institutional allocator looking to deploy in this space, I know credit's the often the most conservative and last one in. It's the safest money, if you will. But we've done the proof of work. I stand behind my track record as one of the top performing portfolio managers in the investment grade dollar space in this new era. And you said higher rates, short. I'll take the other side of that. I think we're in a new trend. But check us out. It's a private markets fund, but you can see our track record, buildbitcoin.com. I'm happy to meet with anybody and go to bat.
Great discussion, guys. Appreciate it.
Thank you. Thanks, guys.